Welcome to the 2021 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Thursday, April 22nd, Earth Day 2021. Today, I want to get right into it. We're just going to be talking about the jobless claims numbers. As you know, every Thursday at 8:30 a.m. Eastern Daylight Time, we get the jobless claims numbers. And once again, according to CNBC.com, jobless claims fall again as employment picture gains strength. And so now the media and everyone is touting that the employment picture is getting better, even though the unemployment rate, according to the numbers, is at 6.1%. We know that it's double that at 12 to 15%, according to shadowstats.com. But on this report, first-time claims for unemployment insurance totaled 547,000 last week. Now, this is below the 603,000 estimate that they've expected, that economists expected. But still, that's over 500,000 first-time jobless claims. But this is the first time since the pandemic started that we've been under 600,000 jobless claims, initial jobless claims. Continuing claims also fell by 34,000 to 3.67 million people with continuing claims. Now, this does not count the people who have given up looking for work. This does not count the people who are underemployed, making 2 and 3 part-time jobs just to make 1 full-time job of what they had before all of this began. And so they're touting that this U.S. jobs market recovery is going to continue through summer, but yet we have minor inflation on food, gas, utilities, and eventually other services as the supply shortage from China and other countries have not been resolved, even though the shipping canals are flowing now. There's a backup. And also with the increase in the beer bug cases in certain states, things look to be relaxing, but yet some states are further closing down things. As a matter of fact, the jobs are not coming back because automation and robotics are going to be taking over the jobs, the future. That is the future. You're going to have robots making your fast food, your hamburgers, your fries. And they've already transitioned to that. If you go to even the basic McDonald's now, they have a touch screen where you pick out your food. And, if you go to McDonald's, and they don't need a cashier. They don't need a person making the food. They have robots doing that. They have robots doing surgeries now, some elective surgeries once we get out of this pandemic situation. And so we're moving into an economy that does not rely on human ingenuity, innovation, and technology anymore because the elite do not want to pay out benefits, health benefits, retirement benefits, or any of that anymore to any of its workers. In addition to that, with these jobless claims, it's going to continue to rise. And so think about it. Since this has been, we're over a year and 2 months into this crisis. And ever since then, we've lost over 700,000 jobs a week. And now we've just gone down to 500,000 jobs a week. So just adding those numbers alone, ladies and gentlemen, that's over 20 million people that's unemployed. But as you know, we have 40 million people that's unemployed in America right now. Of the 160 million people that's eligible to work in the United States, 40 million people are unemployed. That's a lot of people. 8 million fewer Americans are at work before the pandemic started, full time, and with benefits and everything, than before it started. So this is absolutely crazy. 20 million Americans are still receiving benefits under various programs, from the PPP loans to the unemployment insurance assistance. And states are really looking forward to getting more money from the government. And that means that, of course, we're going to get the infrastructure bill, which is another $2 trillion. There's even talks of increasing the unemployment from $600 to $1,000 that the Democrats want to do. It's just going to be a big mess, a big spending mess. And this is the same thing that happened in the Great Depression. The more money that the government and the Federal Reserve spent, the more deeper the depression was. And it actually caused a deflation because people were saving money. They knew that prices had to come down because the consumption is going to come down because people are not out spending in the cities. They're not out spending in leisurely activities, taking plane rides and train rides. As a matter of fact, I was at the mall today, one of these malls, and Starbucks. And it's a very high traffic mall, one of these Westfield malls. Starbucks closed down in the mall because of the high, probably because of the unbelievably high rent, and they're only operating at what, 50%, 40% capacity. So they can't make ends meet there. So they closed down just this week. And you know it's bad when Starbucks closes at a high traffic mall on the corner in a prime real estate location. It is really bad. I'm sure you've seen that in your town too, not just in the malls and the outlets, but other places that you go by, you drive by, next week the store is gone, it's closed. So I was very concerned to see that. And there was a sign on the door and everything and said, please go check out our other location further down in another suburb because, this one is closed permanently. They didn't say it was a temporary close, they said permanently. And every store I see closed in the malls now, let's say something is coming soon, they never come. Another, whether it's a store for young people like Forever 21 or one of these stores like that, or Under Armour or whatever, those stores never come. They never come in and fill the place. They just put decorations in there. And so that tells you that this economy is not only bleeding jobs, it's bleeding industry, real manufacturing industry, things that we need to be able to be a healthy economy. We just don't have that. And the stock market is stalling today too. As you've seen today, the Dow Jones was flat today. It's stalling out because they're looking for the next stimulus check. It dropped down 321 points, ladies and gentlemen. That's because of the economy that's not manufacturing anything, is not producing anything, but debt is bound to stall out. And so the next infrastructure bill, I'm looking for that to be passed probably sometime around June, July, around that time frame, and that may give the economy another boost. But ladies and gentlemen, we're closer and closer to that reckoning, that day of reckoning, that we all preach about here on this channel and on other channels. That the more debt you create, the more dollars you have to create to get out of that debt, and it's a never-ending black hole. And this is the problem that the Democrats face. This is the problem that Republicans face. This is the problem that this economy faces, and they're gonna have to let this thing drop sooner or later. Dow closes more than 300 points lower today following reports of President Biden eyeing capital gains tax hike. So now we're going to have a situation where we have higher taxes, we're going to have stagflation leading into deflation, and that's going to put us right into a depression next year. So 2022 is going to be very rough. It's not going to be a period of growth, and the economy is about maxing out now. It's not quite there yet, but it will be maxing out later on this year in terms of growth potential, and that's going to lead to this depression being absolutely worse, okay? National unemployment rate, like I said, remains at 6%, well off the pandemic high of 15%, but according to reports, considerably above the 50-year low of 3.5% just before the shutdown. So unemployment is effectively doubled, and we're only a year and 2 months into this health crisis, which we already know the health crisis is bound to last for the next 2 to 3 years minimum. Some sources say this health crisis is going to last 5 years, even with the vaccines, because of all the variants and all these states doing different things and blah, 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 blah. So it could last his whole term. And we don't even know if President Biden's going to get a second term, given his age and everything and health concerns. But that's beside the point. The point is that this crisis is going to last for 5 years, and this is probably going to end up being the worst 5 years for job losses, worst 5 years for inflation, stagflation, and it's just going to be a total depression. So what we need to do is continue to prepare, continue to use our time wisely. Food, water, medicine, gold, silver, those things are going to be tangible items that you're going to have. That's not going to be disturbed by a blackout in power or some kind of crazy black swan event that we know is coming as well. So just do those things, continue to do those things, and we'll be blessed as a people, as a nation. And we won't have to worry about too much. We'll be able to help our neighbors and help others who didn't take the time out to prepare because they put all their faith in the stock market and all their faith in this dollar bill, which is getting absolutely crushed right now because of the amount of debt that we have on here. The dollar index continues to struggle here. According to MarketWatch.com, the dollar index is down, closed at $91.28. That's down from a record high, and it continues to slide globally as the world is trying to get out of the dollars and into Chinese back currency, which is coming later on after this depression. Chinese is going to take us back into a gold standard, but they're going to be on their currency, the digital currency, and that's what's coming in the future. And so let's continue to prepare. I'll talk to you guys very soon. I just want to share with you the jobs numbers and what that means today for this economic so-called recovery. Thank you very much. Have a blessed day. Talk to you very soon.